Hey, what's up, guys? It's Jonathan here. So, Bitcoin has been known to be a very volatile asset. And for the past couple of months, it seems like it's just gone straight up every single day. But recently, we've noticed some extreme volatility in Bitcoin's price. And I think some of the volatility that we've seen from Bitcoin has been because of a couple of factors that may be causing Bitcoin investors to be a little skittish. So in this video, I'm going to discuss three catalysts that every Bitcoin investor should watch out for in the near future. So if you like this video, please hit the like button for the YouTube algorithm, and let's get right into the video. So the first catalyst I could see that could cause a Bitcoin correction or even a crash is inflation. The main reason why Bitcoin has been running up is because it's almost seen as a hedge to the US dollar. And due to the fact that there was a study that came out, I'm not too sure about what the study said exactly, but I think it said something like 20 to 30% of every dollar that's in circulation right now was printed last year. And this was due mostly to all the stimulus packages that the federal government passed. And because of that, a lot of people think there's no way we're not going to see massive inflation readings in the near future. So there has been a big movement from cash into Bitcoin, and that actually has caused the value of Bitcoin to go up. And it's very well expected on Wall Street that we're going to see very high year-over-year inflation readings given the stark deflationary period we saw in Q1 of 2020. When the pandemic first started. There was a massive pullback in consumer spending. Also tied in with this inflation fear is also the rising price of the 10-year treasury yield. And the reason why the 10-year treasury yield matters is because it's a sign that interest rates are going to also move up as well. And that causes assets to seem overvalued or inflated. That actually does cause a massive market pullback, especially on companies that are very indebted. So inflation is very important to look out for, especially if you plan on buying some Bitcoin in the near future. As we get inflation readings in the next couple of months, that will tell us kind of where inflation is, and that will also affect the price of Bitcoin. The second catalyst that we need to look out for is the tech sell-off. So typically, Bitcoin tends to like to trade with the tech sector. And this kind of makes sense since Bitcoin is a product of technology that it would move with the tech sector. So if you believe in the tech sector long term, then the Bitcoin is a pretty good play to make, in my opinion. I definitely believe in the tech sector, so I am invested in Bitcoin myself as well. So that's something else to keep in mind. If we see a massive pullback in the tech sector, especially stocks like Tesla, Apple, Google, and Amazon, and so on, then we may want to look out for that as well with Bitcoin. As that pullback could bring up some buying opportunities. The third catalyst that we need to look for as Bitcoin investors, and this is kind of one of the things that caused Bitcoin to crash in 2017, was the fact that people realized that Bitcoin wasn't an easily usable currency. So typically when we go to store, we use a credit card to buy stuff like this Apple Card. And the thing about using a credit card is that your transaction gets processed instantaneously. So you get approved or denied as soon as you swipe the card. The problem with Bitcoin is that because of the blockchain and because it takes so long to process, because it could take a couple minutes, all the way up to even 10 minutes to process a transaction over the blockchain, Bitcoin isn't as easy to transact as a credit or a debit card. But I don't think this catalyst matters so much because I think a good chunk of the investors in Bitcoin now understand that Bitcoin isn't necessarily a currency that you use to trade. It's more of like gold, you know? When you buy gold, you don't buy gold so you can go get that gold to buy stuff. You buy gold to protect your money. And then you use your money to go and make purchases. So this catalyst isn't as extreme, but it is definitely something that we want to look out for because I think that this can cause a damper on the Bitcoin parade. I think that for the most part, it's definitely important that we look out for these three catalysts when we are considering either buying or selling Bitcoin. I don't think that any of these catalysts will cause Bitcoin to drop substantially in the long term. Like most of us know, Bitcoin is a very volatile asset, but I don't necessarily think it's very risky. And I think that as long as you are making long-term plays with Bitcoin, you should be fine in the long run. So I would just see any of these pullbacks in Bitcoins as really great opportunities to increase your position in Bitcoin. So thank you for watching. If you enjoy my perspective or this video, I encourage you to hit the like button and also hit the subscribe button and notification bell so you get notified anytime I post a new video. If you have any questions or comments, leave them in the comment section down below. I try to respond to as many comments as possible. Also, follow me on all the social medias. I try to post there every day. And thank you for watching. Until next time.